we're going to get this show on the road. We like to do this periodically, right? Because we think it's helpful to help clients understand what is happening in the insurance industry. What's good, what's bad, what's not so good, where's it headed, what should I be considering, what are other people doing with their insurance, right? Because like you know, Boer Insurance Group is an independent insurance agency. We offer coverage exclusively in Michigan. Many of our clients are right here in West Michigan. So we think a big value to our clients is the ability to work with an independent insurance agency that can help to explain what is happening, what are we seeing, what looks good, what doesn't look good, and what should we be doing. So
Brian, for those of us, those that are joining us that are maybe not clients, but friends of clients or colleagues of clients, when you say an independent insurance agency, what exactly does that mean? Just for those that might not be aware.
yeah, and, that's a great question, Derek. An independent insurance agency means that we don't work for any specific insurance company. The way we like to say it, we work on behalf of our clients, right? We represent several different insurance companies so that we can help our clients design their insurance plan with the insurance company that is most appropriate for their situation. Uh, that may change over time, right? We do have clients where, hey, this has gotten out of line, or we can't get the coverage we need there, or this needs to be pivoted over here for better positioning going forward, right? We can help our clients to manage that over the long term, where we like to think we can keep things up to speed, be in good position for the long term because we have more tools in our toolbox. I took that one from you, Derek. I've heard you say that, and I like it. That's a good one. So
So clients pay us for that advice and guidance that we provide.
I wish that would be a lot easier. No, right. The insurance industry operates much the same, regardless of the product and regardless of the insurance agency, whether it's the Smith Family State Farm Agency or the Boer Insurance Group independent agency. The insurance agents are compensated by the insurance companies for being that local servicing arm, right? They don't do the servicing on their side. They don't have sales, guidance, consulting, advising services. They outsource those services to a local agency that's going to be that footprint. The difference with Boer Insurance Group, of course, is that we're not tied to any single one of those. We work with a variety of those insurance companies.
Very well said. All right.
Okay. And before we get going here, questions, comments, anything that comes up in here, please use the chat feature in Zoom. I would love to record those. We'll field some of those as we get to the end, but also happy to field those as we work through this content as well. So please, we want this to be as interactive as we can. We know it's insurance. We know it's dry. We know it's boring. We'll try to keep it upbeat and moving along. But if you have specific questions or if we're not being clear on any of these concepts, please put that in the chat. We want to make sure that we can address that as we're working through.
And Brian, speaking of recording, I do believe that we're actually recording this webinar to distribute to clients if they ask for it or maybe for marketing purposes. So just as a heads up to clients, feel free to ask whatever questions you have, but those might show up in that recording. So nothing too private or personal. Keep it as general as possible so we can address those questions and give a good response for the audience to hear.
Absolutely. Yep. And for the specific questions and for the nuances, obviously, we and our team are here to address those with you later today or as they arise, right? Okay, well, let's get this started here. Today's topics, Derek, I gave you about 10 minutes to review this content and get prepared. So we are going to get some raw and and unprepared responses from Derek. He's going to play our subject matter expert today. So I'm going to host and kind of lead this conversation. We're going to get some feedback from him based on what we've already put together, I guess what I have put together and then released to Derek just a few minutes ago. So this will be fun as we work our way through it. A couple of things we're going to hit on. Number one, an update on the insurance industry, right? Where is it at? Right? What am I seeing in the news? Is it really still as bad as they say? Is this ever going to get better? Where's this going and what should we expect? Number two, still a very popular and very common question. Hey, should I file this claim? Right? And sometimes we hear, hey, can I file this claim? Can I file is not a good way to look at it. Should I file is the way to consider your claims. Third, high deductibles. They're here to stay. You're going to get them whether you choose them or not, so take them and take advantage of it. Number four, changes to roof coverage. We had talked about that briefly last year. That was expected. It is here. It's not going anywhere. We're going to talk about that in a little bit of depth. and then avoiding common mistakes. We still see these, doesn't matter how many times we talk about these. Sometimes it's our own clients. Most of the time, it's new clients that we're working with, and these things need to be avoided. What can we do to make sure that we're not making any serious mistakes with our insurance coverage, and that we've got all of our items buttoned up nice and neat? Ready to go, Derek?
Ready?
Okay.
I take it that you're going to drive the slides here.
I will drive the slides. So
Okay.
update on the insurance industry. Oops, I skipped an important word there. A bullish update on the insurance industry. Goodness, we haven't been able to say that in about 5 years, right? So,
Brian, I'm not seeing that on my side. I'm still seeing the very first slide here.
well, then that's not moving along very good, is it? Well, let's try that again then. There we go. I'm clicking
Okay.
along on the wrong monitor. Okay, so there's our topics that I reviewed without anybody viewing those on my screen. My apologies for that. And here we go with a bullish update on the industry. Okay, so it's been 5 years since we've been able to say that. But what is actually happening in the industry, right? It's still pretty ugly, right? Most people understand that. Much like many things out there, it's expensive. Everything is expensive. Doesn't matter what your insurance costs, it feels expensive. We get that. Why is that happening, Derek? Where are we at? And then how is that expected to change in the next 6 to 18 months?
Yeah, that's a great question. Like you said, things are still expensive, but at least they're leveling out, right? There's a period there where every time someone's policy renewed, they were seeing 15, 20, 25, 30%, and it was just what was happening. There was no getting around it, and insurance is an essential part of everybody's, financial plan. So it's kind of the take it as it is and, grin and bear, if you will. Uh, Finally, we've started to see those premium increases starting to flatten out. A big part of that is some of these modifications that are happening to insurance policies, which we've got a note here in the middle. Insurance companies are starting to limit some coverage offerings and in certain cases pulling out of states entirely. They're getting more selective on where they actually want to operate, the coverages that they'll offer, the type of underwriting they're doing. So it's no longer very simple and easy to get whatever coverage you want at a pretty reasonable price. It's okay, we might offer that coverage at a reasonable price if you can check all these boxes. So it's getting much more particular and a little bit more specific to the individual, but that's helping your good types of clients, those that have good credit scores, they make their payments on time, they maintain their home and vehicles, they don't file frivolous claims, their insurance is becoming more reasonable. That being said, I think we're still going to see 6 to 12 months of rate increases as the industry gets to that leveling off or that plateau of rates. They've been slowly catching up with the claim payments that are going out, but I think we're about to hit that after, gosh, 3 or 4 years now of pretty significant rate increases.
Yeah, agreed. And it's important to understand that the insurance industry is a competitive market, or at least in most states, it's a competitive market, right? The challenges you hear in California and Florida and Texas and some of those others, legislation there has made the industry not a competitive market. That's tough. That's when things get really expensive. In Michigan, we've always been, and I expect that we always will be a competitive insurance market. And what you saw over the past couple of years was insurance companies pulled out of the game. No, they didn't leave our state. They're still here. You still see them advertising, but they did not want business, right? They were not in the game to play insurance. They're getting back into the game. The more competition you have in that, the better stability and the more favorable we're going to see from a rate standpoint as things move forward. So it's
Brian,
favorable that, yeah.
oh, sorry to interrupt you. But what would be an example of an instance where an insurance company said, yeah, we still are offering new policies, but in reality, they were not because they made the underwriting so impossible to do or the insurance applicant's expense so high that that person was never going to actually choose to do business with that insurance company. Can
How
you share an
about,
example with our viewers?
yeah, perfect example, right? 3 weeks of bind time. So if you need a policy in the next 3 weeks, no luck, right? It's got to be at least 3 weeks out, and you've got to have a full home inspection report from a third party, which you got to go get it. You got to pay for it, and you got to get it over to the underwriting team for them to review it. Oh, by the way, the roof's got to be less than 10 years old. It's got to be paid in full. And they want an accompanying auto policy with it, right? I mean, no one is, that is absurd. That's saying we do not want business.
So
No,
I'm
thank you.
paying that $500 or $600 to a inspection company the same way I would if I was purchasing a new home and I wanted to make sure that everything was in good order before I closed on that deal.
Yep, bingo. Yep. So
Yeah,
yeah, yes, you're still here. Yes, you're still offering coverage, but in all practical purposes, you're not, right? We're seeing a lot of that be lifted. That's very bullish. That's super favorable, not just for consumers, but also for insurance agents. It makes our lives easier and allows us to have better options and better predictability about what's going to be expected and what's going to be required as we're looking at those new insurance policies, right?
makes sense. Brian, there's a note here that all bets are off if the tariffs actually go through and they're as severe as they were initially thought to be, or maybe even more severe than that. What happens in that case and why?
Yeah, that's going to be a challenge, right? I mean, we're talking about the insurance industry finally kind of plateauing. We are very bullish, especially on the auto insurance industry over the next couple of years. But if all of that truly goes through, right? I know it's being tried in court. It was blocked. Now it's maybe not, and how that all rolls out. But it's amazing. Even the vehicles that are 95% produced and assembled here in the United States, they still get electronics from overseas. And guess what? If those electronics become harder to get and a big supply chain delay, it's going to drive up insurance costs because that's going to be very expensive. We saw that several years ago where you couldn't get parts, right? You had the chip shortage. That makes things expensive. That's just a silly little chip, but it has a big impact on the supply chain and then the cost of making those repairs to the vehicles. And guess what? Anybody that drives a vehicle that's 2020 or newer, that's no surprise, right? You know how many electronics are in there. You get the warning that the adaptive headlight isn't working properly, and then the blind spot monitoring stopped, and now the tail light the tailgate recognition piece isn't where. I mean, the electronics that go into vehicles today is absurd. I sound like an 80-year-old saying this, but I don't want them. Just give me a steering wheel and a six-speed manual and let me have a good time. But they're there and they're expensive to
Take the
fix.
airbag out too, because that
It's
might malfunction. You don't have to pay to repair that.
Yeah, that's right. Don't tell my insurance agent about that. But yeah, so we say all bets are off, right? If that actually comes through and we do see the impact of that, that's not going to be favorable, but insurance is just going to be one of the pieces that we're all going to be complaining about if that all actually goes into play, right? So Derek, quick comment on the home insurance side of things, right? We're bullish on the auto insurance. I think home insurance is getting there. It's becoming more competitive. We're still seeing big home insurance premium increases in 2025, but we're kind of thinking that that's maybe the last step to get that to where it needs to be. What's your take on what you're seeing from various insurance companies and with several clients?
Yeah, well, two different things going into that. Number one, I think we're still seeing some relatively significant increases, but we're at the very tail end of that. And a big part of that is the adjustment to the dwelling coverage on the insurance policies. We've got a note here that most homes are still underinsured by about 20%. So if it would cost, let's say 500,000 to rebuild that home, the insurance policy might only show 400 or 420,000 of dwelling coverage. So a lot of the insurance companies are doing these internal analyses to make sure that those policies are being bumped up to the appropriate coverage amount. And so you're seeing a relatively significant premium adjustment when those policies renew. On the flip side of that, we're seeing these coverage limitations and deductible modifications and other types of policy language that was recently enacted being actually filtered through the policies at this point, and it's having an impact on how much payments are being made when a claim does occur. So that's starting to dribble in, and that's helping reduce the cost of home insurance. Unfortunately, it's not like we're just modifying the pricing of it. The coverage is, of course, being modified as well. Higher deductibles, actual cash value coverage for roofs. Claims are getting a little bit more scrutinized by adjusters.
Yep.
But I think it is helping stabilize the home insurance market and making insurance at least a little bit more obtainable for most Michiganders.
Sure, sure. Now, before we move on to action steps, right? Give us just a 60-second summary. We get this question all the time, whether it's clients moving to Michigan, clients moving out of Michigan, or just in general, right? How does Michigan auto and home insurance compare to the rest of our country, right? That's a very common question. What's the snapshot answer to that?
Yeah, that's a good question. You hear all the time that Michigan has outrageous auto insurance rates, and it's the highest in the country. It's double anywhere else. And that's actually maybe a decade or 2 decades old of thought process at this point. It's up there. It's in the top 10. But a big driver of that is the East Side, the Metro Detroit area. They're paying auto insurance premiums in line with your top 2 or 3 states here in the country. But if you look at West Michigan and Northern Michigan and Southwest Michigan, you're seeing pricing that's in line with about the 50% median when looking at the cost of insurance state by state across the United States. Overall, when you look at that, we're about top 8 to 10, depending on which study you look at when it comes to the cost of auto insurance. So it's still up there. It's a big part of people's budget, but it's not nearly as bad as it used to be, or those other states have gotten worse. I don't know. It depends on how you look at it. But from a
Sure.
home insurance perspective, we're right in the middle, maybe just a tad below the median when it comes to cost of home insurance. No big surprise. Florida is the number one state when it comes to the cost of home insurance, and it's about 3.5 times what it costs to insure a similar home with similar coverages here in Michigan. So overall,
Even
if you
if you're
look
not
at
on the coast, right?
even
You can
if you're
just
not
be in
on the
inland
coast, yeah,
Florida. Same with Texas. Same with,
yeah,
I mean, you don't
yeah.
think about that. You think about these people on the coast, but it's not. It's even for a similar home that's inland in one of those states.
Yeah, yeah, very true. I think when you look overall, a family's total cost of home and auto insurance here in Michigan is about on par with the national average when you're considering
Sure.
both of those policies.
Very good. Okay, perfect. Well, we rambled long enough that our viewers and our guests have probably already read our 4 steps of what should you do. But what's your quick summary here, Derek? You know, it's nice to know this information, I suppose, but it's a different story to actually take action on it. Give us just a couple of high-level suggestions here about what you should do to make sure that the insurance plan is positioned appropriately for where we're at today in the industry.
Yeah, I'm going to take my time and say, forget the summary, forget the suggestions, and just take one piece of this away and put it in your action items folder. That's make sure your credit score is high and stays high. Very easy to
Why?
Google.
What are you gonna do? Sell me a financial product? You're selling mortgages now? Why do you care about my credit score?
I know, and people think, well, I always pay my insurance premiums to the company, on time and in full, so they know I've got good credit, and they should be rewarding me for that. Uh, they don't look at that. This is not a can you afford to pay your insurance premiums, and or is the insurance company going to have to chase you for them and file a collections order on your behalf? No, this is literally a rating factor that goes into every single insurance policy, and it's based on your credit factors. Credit score? No. All the factors that go into your credit score? Yes. And that's typically going to make up about 50% of the rating of your insurance policy. So it's the most impactful rating factor that any of us has
Wait, wait,
here
wait,
in
wait.
Michigan.
No, but I'm a good driver. I've never had any claims. I don't have any tickets. Why would my insurance really? Hmm.
Doesn't matter. If your credit score is 450, your insurance is going to be absolutely outrageous.
Well, I'm sure it's only one or two insurance companies that do that. I mean, there's no way they all do that.
Every single one of them. Why? Because if you're the one that doesn't do that, and it turns out that credit factors are indicative of likelihood of filing claims, well, you're going to be the one that gets all the people with low credit scores that do file all those claims. You're going to be out of business within a couple of years. So
So
all of them do that.
they do. And guess what? It's not new. They've done this since 2000, right? We're 25 years into this. This is nothing new, but it flies below the radar. So we want to bring this up because it's extremely impactful to the cost of your insurance. To give you some context, if you go back to 2020 when the state of Michigan was writing the new auto insurance law, uh, one side wanted to make sure that credit scoring was not included in insurance pricing. That would have been incredible. Whether you agree with that or not doesn't matter, but that would have been very unfavorable to most people in West Michigan. In West Michigan, your average family has a relatively high credit score. You're getting benefit from the fact that insurance companies use credit scoring when they're pricing insurance policies. So whether you agree with it or not doesn't matter. The industry doesn't care what I think or Derek thinks or you think. That's what they do. It's been here forever, and it's going to keep going that way. So take advantage of it. Keep your credit score high. It's going to pay you back over and over again in your insurance premiums, right?
Yep.
Okay, Derek, what's unique about Michigan? Right? You already hit on this for the most part, right? We've got the new auto insurance law from 5 years ago. But what else is happening? This is really specific to umbrella policies here, which we'll touch on in just a few minutes, but give us the open and obvious piece right there. I mean, I pay a little bit of attention when I'm driving, if I'm not, turning around yelling at the kids or trying to keep the car on the road. But I've seen all the personal injury billboards on the highways, right? They're all over 131, they're on 96. Why did those show up all of a sudden? What is that about, and why do I care?
Yeah, well, I'll hit on that as well as one other point. If you look back just over the past 5 years here in Michigan, there's been two things that have really increased the litigiousness of our state. Number one, which is noted here is the 2020 auto insurance reform. That says if you get hurt in an auto accident, you can now sue that other person if you have uncovered medical expenses. That was never something that happened in the past, so there was no attorneys trying to talk to injured parties and saying we should go after that person for your injuries and the associated medical expenses from this accident. So that became a thing back in 2020. And just this past year, a court ruled that there's no longer the opportunity to use the open and obvious defense if somebody is hurt on your property. So now, if I'm a homeowner, I've got a big lawsuit exposure when my driveway is slippery from snowfall, when my back steps have a missing railing on them, when I'm doing some sort of yard work and I leave my rake out. Anybody that gets hurt on my property is going to, in all likelihood, sue me for their injuries, and I can no longer say, look, any reasonable person would have known that that driveway was going to be slippery. There's 8 inches of snow on it and it's sleeting right now. Well, previously the court would say, yeah, that's pretty reasonable. That person should have known and taken, precautions, or they just willingly accepted the risk of walking on your driveway and potentially slipping and falling. Now, no can do. It was my duty to prepare that driveway in a manner that allowed them to enter my home, regardless of what it looked like or what a reasonable person would do in that scenario. So lawsuits are now much more likely here in Michigan. And as you noted, we're having increases on umbrella insurance because those lawsuits are more prevalent.
Thank God an umbrella insurance premium is still 2 or 3 or 400 bucks a year, and it's still an incredible value. So, yeah, when you see a 30% increase, the percentage doesn't look good, but from a dollar value, it is not the end of the world. So, what do we do about this, Derek? Before we move on, what do we do about these changes in the litigiousness, I think you said, of Michigan?
Yeah.
Love to see you spell that.
Figure out what liability coverage you need. How much lawsuit protection do you want? Talk with your attorney friends, talk with your personal injury attorney buddies, talk with your neighbors, talk with your insurance agent, your financial advisors, and then say, hey, insurance agent, help me get this amount of lawsuit protection. We've got notes here of how it looks like on your auto insurance and on your home insurance. And then, of course, you've got the umbrella insurance that goes on top of that. But determine how much you feel comfortable having from an insurance perspective to put on the table if someone is seriously injured or killed and they're filing a lawsuit against you. What amount would make that other party say, okay, this person did their due diligence, they financially protected themselves, they're going to take care of me and my family or their surviving spouse because they purchased enough insurance, and figure out how to get that amount.
Very good. Love it. Okay, moving on. I know our guests are looking at the clock thinking, holy smokes, they've got 6 minutes left and they're only 20% through. Well, these next ones are going to be quick hitters. So we're going to hit on claim filing next, right? And what does that mean, Derek? To file or not to file? That is the question, we say, right? So tell us about that.
Yeah.
What are the claims that we should be paying? And what are the ones that I should be sweeping under the rug?
Yeah. Well, I think you mentioned it earlier. It's not can I file a claim? It's should I file a claim? And we see this happen with a lot of clients that are coming to Boer Insurance Group and asking us to review their insurance, new clients that is. And they might be using a company like Geico or Progressive Direct or somebody like that. And we'll pull the claims data and it'll show that they had an at-fault accident a year ago and $300 was paid out. Or they had a home insurance claim for $350 2 years ago. And those don't make sense to file. But because there was no advisor that could tell them, you just want to eat this thing and not make it an insurance claim, they proceeded with it. It showed up on their claims history report, and now they're going to pay for that years down the road. So that's not a should I file? That's a can I file? Okay, yes, let's do it. It's not a does this exceed my deductible? And so I'm going to file it type of determination. It's a after considering my deductible and what my claim payment is going to be, is it worth it financially when considering the increased insurance expenses that I'll have from a rating perspective over the next few years, plus the risk that I might have another claim that would then result in even more significant insurance premiums in the coming years. So there's a lot of considerations that go into should I file this claim or not.
That doesn't seem fair, right? What if it wasn't my fault? What if my car was hit while it was parked, or it was an act of God that caused a home insurance claim? I mean, why would that have any impact on me? That doesn't seem fair.
I agree. There's a lot of parts of the insurance world that aren't fair. I think the biggest one would be when you look at health insurance, which we do none of. But I've talked to some health insurance agents, and they'll have a group of 100 people that are enrolled in that health insurance plan, and they'll happen to have a few that are diabetic. They'll have a few that were diagnosed with cancer. They'll have some that need some sort of mental support on a weekly or monthly basis, and it's like that company pays a ton for its group health insurance because it has people that have unfortunately fallen on hard times from a health perspective. That's not fair, right? That person got diagnosed with cancer. Oh my gosh, you feel horrible for them, but that cost of the insurance is going to rise because the group of people there are using the insurance and it's indicative of what might happen in the future. So I got rear-ended once. Doesn't mean that I'm a bad driver and I always brake too hard or I cut in front of people and then slam on the brakes at the last minute. No, but it might in some instances,
Sure,
right? So they're
sure.
looking at a big pool of people and saying, with other people in the same scenario, what happens down the road? You don't want to put yourself even in that position if you can avoid it.
Yeah. So you don't like it, we don't like it, but it is the way the industry works, right? And we cannot shape a $1 trillion industry. All we can do is help our clients make that industry play out the best way that it can on each individual basis. So, nope, doesn't feel fair. Nope, it does sure doesn't seem fair, but it is what it is, and we're going to do our best to help make sure that that plays out in your favor.
I think we should point out, Brian, just real quickly that
Yeah,
uh, various claims will impact the rating in different ways, right? Hitting a deer is much different than rear-ending a school bus. So that is going to go into our decision of whether we suggest filing that claim or not. So it's not like getting rear-ended is the exact same as, ramming into your garage door.
right,
So
right.
just to be clear about that, insurance companies aren't that evil, but yeah, all claims do matter, but they have a different impact based on how it occurred.
Certainly. And some of our clients need a boost to get them to file the claim, right? I have a client that had a $12,000 auto insurance repair and they were scared about the premium increase and they were considering paying it out of pocket. I said, this is a clear claim to be filed, right? You might give back a few $100 over the next year or two, but you're putting $12,000 in your pocket. So talk with your insurance agent. Some of them, most of them are clear. Yes, it should be filed. No, it shouldn't. There are some in the gray area. There's no wrong answer for those, but have that conversation and make the best decision for you. High deductibles, Derek. Most everybody's aware of this by now because this was rolled out last year. High deductibles are here to stay. They're not going away. They're not going back. What should we be doing about those deductibles and why are they here?
Well, they're here to help stabilize the insurance industry. It's been 4 or 5 years of a rocky roller coaster, and higher deductibles helps eliminate those small claims. A lot of times it costs the insurance company the same from an administrative perspective, whether it's a $800 claim or an $8,000 claim. They still have to assign adjuster, talk with the client, review the repair estimate, talk with whoever's doing the actual work, cut the check, follow up. That happens regardless. So having those higher deductibles eliminates those smaller claims, number one, and all the administrative work that goes along with it. But number two, it just helps stabilize the industry because people are now knowing that they're not going to be filing small claims for 800 or 1200 or 1500 bucks, especially from a home insurance perspective. And that allows the insurance company to say, let's modify the cost of these insurance policies because we know that these smaller claims are not going to happen. So that's part of the reason we've seen insurance level out over the last 6 to 9 months is because these higher deductibles are now flowing through the industry and having a positive impact on the claim payments that are being made.
Absolutely. Absolutely. So they're here to stay. Prepare for them. Take advantage of them. That's why the industry is finally turning the corner. So you're not going to file a small claim anyway. When you call and talk to Derek, he's going to tell you that $300 repair when you hit the mailbox is not something you should file. Why have a low deductible? Take a higher deductible, pay less on the auto insurance. Roof coverage. Derek, this is a big one, right? This is one of the biggest changes in the home insurance industry over the past, I don't know, couple of decades. What are we seeing here? Michigan, I understand, looks much more like many of the other states in the country now. What do we mean when we say that roof coverage is being and has now been diluted?
Yeah, well, if you look at the, Tornado Alley states and even, some areas of Colorado and Utah, basically if you go along that line up through parts of Indiana, Ohio, Illinois,
Wow,
a
look
lot
at
of
this
those,
guy with his GI. Unbelievable. I'm
right?
surprised you could even name 5 states.
I
Good. Okay,
know,
sorry,
I
keep
know.
going. Keep
A
it
lot of
going.
those states are considered wind or hail states. That means that wind or hail makes up a big portion of their home insurance claims. And so in almost every single one of those states, the coverage for a roof is on depreciated value or actual cash value from a coverage terminology. So that means that if your roof is destroyed when it's 20 years old, the insurance company doesn't pay to put a brand new roof on your house. It pays the depreciated value of 20-year-old shingles. That's par for the course in about 50% of the states here in the country. It was never thought until about 3 years ago that Michigan was one of those states that would be considered a wind or hail state. But well, the weather here over the last 3 years has proven that it probably is one of those states. So insurance companies have adopted two different tactics for managing the cost of claims for roof damage due to wind or hail. One of them is a separate wind or hail deductible. So if my common deductible on my homeowner's policy is, let's say, $2,500, that's what would apply to fire, smoke, lightning, explosion, vandalism, theft, burst plumbing, those types of things. But if the claim for damage to my home is due to wind or hail, my deductible is going to be a percentage. Sometimes it's 1%, sometimes it's 2%. It's going to be a percentage of the dwelling coverage on the policy. So if my dwelling coverage is $3,000 and I have a 1% wind or hail deductible, my deductible is going to be $3,000 for a wind or hail claim, and it's going to be my other deductible for anything else that happens.
Just real quick, when Derek said $3,000 for dwelling coverage, he meant $300,000 for dwelling coverage, which then your 1% deductible would be a $3,000 deductible.
I
Correct.
was, well, I was talking about that little cardboard box that page puts me in. That's what I
I'm
consider
sorry.
my dwelling. Yeah,
Got it.
but my math was bad in either event. So, yes, thank you, Brian. The other
Understood.
tactic that insurance companies are employing, which is a little bit gray. The state of Michigan has approved it in some cases, it's declined it in others. So we're really waiting to see where the state heads from an overall industry perspective. But it's taking that actual cash value approach to roofs here in Michigan. That's the one that I mentioned that about 50% of states here in the country use. And that's the one that says if your roof is damaged by wind or hail, the insurance company doesn't pay for a brand new roof. They pay to put a new roof on your home minus whatever the depreciated value was of those shingles that were on it. So if your roof is only 1 year old, they're going to put basically a brand new roof on your house. If it's only got 1 year left on its remaining life, they're not going to pay much at all. They're basically just paying you
There's
what
no
the
claim.
depreciated value was of that roof when it was damaged by wind or hail.
Bingo. And some of these changes were necessary because there was just so much incentive for homeowners to hope that that wind or hailstorm would rip through when their roof is 25 years old, right? There are a bunch of neighborhoods that were built around year 2000. All those homes have roofs that are 25 years old. There's huge incentive for the homeowner to go out and say their lucky prayers that a hailstorm is going to destroy the roof because they need a new roof anyway. So part of these changes are helping to eliminate or at least offset or mitigate some of that incentive where the homeowner gets so far ahead if timing just so happens to work out that one of these wind or hailstorms comes through at just the right time when the roof needed to be replaced anyway.
Well, and I think one of the biggest challenges is that that roof that's 25 years old, at some point over its 25 years, it's suffered hail damage here in Michigan, right? Maybe it was in 2008, maybe it was in 2015, maybe it was one of the recent storms in 22, 23, or 24. but the insurance company and the adjuster can't determine when it happened. So was it auto owners that had the policy at that time? Was it Citizens? Was it State Farm? Which insurance company was actually insuring the home at the time of that damage? Was the deductible 500? Did it change to a wind or hail percentage deductible? It just becomes very, very gray. And so it was impossible for insurance companies to determine what coverage really applied and when did that damage actually occur.
Interesting. Very good. All right, Derek, bring us home. Keep us on the straight and narrow. Don't let us make any silly mistakes. Take 30 seconds here and hit us with the high level comments to make sure that we are avoiding some of the common mistakes that we see in Michigan.
Yeah. Well, I think the big one here is the PIP coverage, personal injury protection. That's the one that was unlimited for everybody here in Michigan until 2020 when our law changed. It's still unlimited for probably 90% of people statewide. Probably 98% of our clients still have unlimited, but that's the thing that pays for your medical expenses plus any sort of ongoing care that you might need if you're hurt in an auto accident. So they're going to pay that in-home nursing that you need. They're going to pay for your stay in an assisted living facility. They're going to pay to modify your home or your vehicle to make them handicap accessible. This is something where having any amount other than unlimited really jeopardizes your net worth, especially for those older clients that have
And all
a
right,
nest
moving
egg
on.
saved up.
Very good. 30 seconds was really strung out. Don't listen to us. Listen to your Medicare agent, your health insurance agent. They all tell you keep that coverage at unlimited on your auto insurance policy. Derek, your umbrella. If I need to squeeze a couple $100 out of my insurance plan, could I get that out of my umbrella? Do I really need to have that at this point? Maybe I'm retired, or maybe I don't have a pool, or I live at a lake. Should I get rid of my umbrella these days?
I think at the bottom here we said most courts value a human life between 5 million and 10 million bucks. The Environmental Protection Agency said a little over 10 million. FEMA says 7.5 million. Just Google what is someone's life worth, and they're going to show age, gender, et cetera, and say what that life is worth from an economic perspective. Think about that before canceling your umbrella policy, because if you severely limit someone's chance of living a good life, or you actually eliminate their life, there's going to be a large lawsuit against you.
Understood. Legal ownership. What does this mean? I mean, I've got my insurance policies. I'm insuring some stuff. I got my stuff insured. And I see my name on the policy. What do you mean mistake legal ownership?
Yeah, this one is huge, and we see this all the time. Um, the legal owner of the item, whether it's a boat or a vehicle or a home, needs to be the one that's insuring it or at least appropriately disclosed on that policy. So if my home, which was deeded to Derek and Paige Boer, gets put into a trust, the Boer Living Revocable Trust, Paige and Derek Boer no longer own that home. That
Mm,
trust owns the home. That trust needs to be listed on that insurance policy. The same is true if I happen to, change the title of my vehicle to my parents. They need an extra vehicle. I've got one sitting around, and so I do that. Even if I'm still insuring it, and maybe I even list them as a driver on my policy. Well, if it's not titled to me, I can't insure that vehicle. So legal ownership needs to be in line with how those items are actually
but
insured
what,
on the
what if
policies.
what if we're on the same cell phone plan, right? What if we've got a cell phone plan, right? I've got my kids that are off here, and my son in Indiana, and my daughter in New. We're on the same cell phone plan. Why can't we be on the same auto insurance plan?
And maybe still on the same health insurance plan because the
Yeah,
kids are
yeah.
24, they're married and they moved away, but
Right.
health
Spoiler
insurance
alert.
still,
Yeah.
yeah, yeah,
Auto insurance,
different
it's
thing.
not a choice. It is written into law and it's interpreted strictly. The new law in 2020 specifically addressed this, and it's been interpreted very strictly. So no, if that person, if that child, if that spouse, if that parent does not live in your home, they are not covered by your policy. It's not your choice. That's the way the law was written, and that's the way it gets interpreted.
Got it.
Okay, the low-hanging fruit, Derek. This is one of my favorites. What do you think? What's the low-hanging fruit out there? How can I get some additional value and make sure that I am taking advantage of it?
Yeah. Well, I think this goes along with what we mentioned earlier about the strict underwriting. If your policy cancels for non-payment, you better haven't had a claim in 10 years and you better have paid everything on time in full before that. Insurance companies aren't going to reinstate that policy. You're going to have a lapse in coverage. You're going to have to go use one of those low-grade insurance companies after that. So turn on auto pay. It's going to make everything much, much easier. And make your home look good. Like we mentioned here, moving from one insurance company to another should only be done if it's absolutely necessary. For a couple $100, absolutely not. If we're talking, $1,000, sure, let's discuss it and see if that makes sense. But that new insurance company is going to underwrite that home very, very strictly, probably a lot more stringently than the prior insurance company did. And if they see anything on the roof that they don't like, if they see some overgrown vegetation, we've seen them say that there's cracks in the driveway that need to be filled. They are very, very picky these days. So only do that if it's really worth doing and it's not going to cause some huge headaches as a homeowner.
Beautiful. I love it. So, if you just woke up, right? How could you just be waking up with all the energy Derek is bringing to us today, right? He is jazzed up about this. But here you go. Focus on the big ticket items, right? Like your PIP coverage, like your liability coverage. File claims wisely and don't file claims wisely. Number three, choose a higher deductible. If you don't choose it, you're probably going to get it anyway. So take advantage of it and understand what that deductible is. Create a sinking fund to replace your roof. Your home insurance policy should not be your plan for replacing your roof when it gets to 20 or 25 years old. Create a sinking fund. If there's a covered claim, awesome, you won, but don't plan on that for your expenses. Insure unlimited PIP, right? Don't get fancy on the auto insurance. Keep it at unlimited. That's what everybody does. That's what everybody should have. It's not that much more expensive. Rolling the dice is not worth it on your care if you need it for years or even decades. And finally, only switch insurance companies if necessary, right? We help clients with that decision. No, we're not going to split hairs over a couple $100. It's not worth it. It's not worth your effort. It's not worth the risk of the underwriting. But there are some opportunities out there, and if that makes sense and it's worth doing, of course, we're going to help navigate that as well.
Unless you're not a client of Boer Insurance Group that's watching this, then of course join Boer Insurance Group under all circumstances.
Understood. Thanks for that clarification. Well, Derek, thanks for being our subject matter expert today. We've got a couple of questions that rang in. If you have other questions, please shoot those over to me in the chat and we will answer those here as we take just a couple of minutes for Q&A. But before we get into the Q&A, thank you so much for joining us. We sure appreciate it. The clients that work with us, we love doing this. We really do. I know we make fun of the insurance industry and our nerdy desire to be here, but we love it. We love working with our team. We love working with you, and we sure appreciate your support, your encouragement, your trust, because that's what makes this all possible for us to get up and be able to serve clients here in Michigan every day. So thank you for being with us. Thanks for working with us. And thanks also for your friendship. Q&A side, a couple that rang in earlier. Derek, you mentioned that, I'm going to summarize this a little bit, but you talked about the wind or hail deductible on the home insurance. We had a question from Bob that says, if a tree falls in a storm, does the higher deductible apply? I think the higher means he's talking about that with that wind or hail deductible. So if a tree comes down in a storm, is it that policy deductible, the normal deductible, or is it going to be triggering that wind or hail deductible that's typically going to be higher?
Wow, that's a really good question.
That's what I said.
The insurance policy refers to what's called the proximate cause of the damage. So they're looking at what was the beginning of that domino effect. They're going to say that the tree fell due to, in all likelihood, wind, and therefore the wind or hail deductible is going to apply. Now, we've seen other instances where it's been a bluebird day with no wind, and there's an old dead tree that just finally uproots itself and falls. And we've seen the policy deductible, the lower one, apply in some of those instances. That would be a falling object rather than the proximate cause being wind or hail, but it's really up to adjuster discretion and certainly one of those gray areas.
So if that tree comes down on a day that is not windy, I want to get out there and take photographs of it and have witnesses that can say that came down when it was 74, sunny, and absolutely no breeze blowing through, because that can make a big difference on my deductible.
Yeah, you want to
Okay.
video yourself trying to fly a kite and being very unsuccessful.
I love that. All right, another one. Derek, for you, going back to the comments about the ownership of an asset. David said, we have a trust, but our home is not deeded to it. Does my insurance need to show it? I think it would be our trust. I think he's saying, if we have a trust, but the home is not deeded to the trust, do I need to do anything with that trust?
That's a great question. No. If the home is not currently deeded to the trust, it does not need to be listed on the home insurance policy. A lot of attorneys are actually using that as a strategy these days. 20 years ago, it seemed like the common thing was to deed the home to the trust. But I think a lot of attorneys these days are saying leave the home deeded to the married couple as individuals. And in a lot of cases, they're using a ladybird deed to move the trust of the home into the deed of the home into the trust upon the passing of that couple. So
Very good.
until
We've
it
got
actually
Derek
moves into
giving
the
legal
trust,
advice.
yeah, yeah,
Keep
yeah,
with us. We're
well,
going to go into
yeah,
financial
yeah.
advising
Oh
advice,
my
and
gosh,
we'll do
no,
some
no,
tax
no.
advice after that.
No, no, no. Having a trust doesn't mean that the home needs to be that needs to be shown on the homeowner's policy. It's when it moves into the trust from a legal perspective.
Very good. Okay, perfect. And finally, we've got a question from Janice here. Janice says, would my umbrella policy be canceled if I ever had to use it? I have not heard that question before. Would my umbrella be canceled, Derek?
It depends.
Depends on what it was that happened, what triggered the claim, how much was paid. What does that depend on?
Yeah, that's a great point. If you use your umbrella policy because you got a DUI and you killed somebody, it's going to be canceled, but so is your auto insurance. It's going to be a very, very challenging road ahead for you. If it was canceled, if you used it because an Amazon driver slipped and fell on your driveway and you weren't allowed to use that open and obvious defense and the insurance policy paid out, no. Did you really have any negligence? No, you literally just got, kind of bad time, bad place type of thing. Um, that being said, umbrella insurance doesn't fall under the Essential Insurance Act here in Michigan, so it gives insurance companies a lot more leeway to make just gut decisions on how umbrella insurance will or will not be offered to people and what the pricing is going to be. From an auto and a home insurance perspective, insurance companies have to follow what the state says very, very, very strictly. Umbrella insurance is a little bit more of the Wild West where the insurance company can use its own judgment in determining that type of thing.
Understood. Yeah. But much like our comments on filing claims, right? Do you really, if you just had $1 million lawsuit paid by your umbrella policy, I mean, sure, you know you want to have that policy going forward, but holy smokes, you got a lot of bang out of that $300 a year that you were paying for that umbrella, right?
Yeah, yeah,
Very good.
fair.
Okay. Well, that covers the questions that rang in. So we will wrap it up here. Again, thanks everyone for joining us today. See a lot of familiar faces, or I should say familiar names here in our attendees list. And we very much value your time today. You're joining us here. If you have follow-up questions or friends or family or neighbors that need some of this information, we'd be happy to talk with you. We'd be happy to talk with them. We love to position ourselves as a resource for all of our friends and family and neighbors here in Michigan. And we're always happy to chat. So thanks again for being with us and have a great rest of your week.